All right, good evening, everyone. Good to see everyone once again. My name is Alex from MarketWise Asia, and today we have a special guest speaker. So I hope you guys can see him. All right, this is Kar Yong. I think he's on the right hand side of your screen. I think so.
Yeah,
Okay.
right hand
So
side.
yeah. So Kar Yong, say a hi to everyone. All
Hello.
right. Hi, this is Kar Yong. I think Kar Yong, if you have attended the recent Nasdaq Trading Festival, okay, you should have heard him talk and speak at the event, okay. And he's the founder of the eSmart Academy. And yeah, before I forget, right? So if you guys can hear us loud and clear, and also Kar Yong, please say a hi to us in the comments and in the chat box, because this live stream is being broadcasted to both YouTube and also on Facebook as well. So give us a hi, say a hi to us, whatever it is, yeah, today is Friday evening, all right? So it is the 5th of August 2022. All right, so give us a hi, say a hi to us. Let me take a look at the comment. I see a comment. Hi, Datuk from James Tan. So who are you referring to? Obviously, it's not me because I'm not a Malaysian. So he is referring to Kar Yong. Hello, Datuk Kar Yong.
Not me
All right,
also.
Amanda, Han Hop, James Henry, Gilbert, WL, Juki, Mark, SJ, okay, Kit Leong, Edmund, all right, Pauling. Okay, so good to see everyone of you here. So the time now is 11:30. So we started on time. I believe there'll be more people who will be streaming in. Okay, so just give them a few more minutes to stream in. So as mentioned, right, this live stream is being broadcasted to both YouTube and also on Facebook right now. We have about 120 people in the room right now. Okay, so if you guys are interested, to hear what Kar Yong has to share, I believe those who have heard him speak, that he give very good content, right? So if you're excited, okay, just type me in the comments. Type me in the comment, okay? I hope you share good stuff today. If you want Kar Yong to share good stuff today, just type me in the comments. Every week you hear me speak, right? Also sian, right? So I must get some new speaker on board. Okay. All right. So you see Kar Yong, you see all the me is starting to come in already. So you shouldn't disappoint them. So as I mentioned, right, every week, hear me talk about the charts and all this a bit sian. Okay. So yeah, without further ado, okay, I will let Kar Yong share his stuff. So Kar Yong, what will you be sharing with us today? We can talk. Let us know and prepare the audience before kickstart your session.
Yeah, so I think one very common question that many people probably be thinking is like, is the market bottom with the recent strong bounce, right? Especially last month closing was like a huge bullish candle. So I think a lot of people are thinking more towards like, is it the time to get involved right now? Has we seen the bottom in the market? So I thought today to share with you my framework that I use to kind of understand whether is it the best time to be buying or should we still be careful. So it's actually more a little bit on the macro outlook, big picture, right? So likely we're not gonna go into like any stock recommendations, but at least we'll take about maybe 15 minutes or so to just give you a broad picture overview macro, in terms of the framework that I use, so that you also have a little bit of understanding. Like it's not, I feel that the market is bottom and therefore you buy, right? You need to have a proper guidelines and things like that.
Okay, so before we kickstart this session, so right now there's more people already. So as usual, a disclaimer first, whatever we share today, me or Kar Yong, right, it is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Okay, so please do your own due diligence. Our opinion, okay, doesn't mean that we are right. Okay, so yeah, entertainment, entertainment purpose. And okay, like what Kar Yong mentioned, right? So we're going to share with you like whether it is a good time to buy or sell and such, and give this analysis. Before I really go into that, right, like Kar Yong share, can I just have some quick show of hand, right? How many of you right now are bullish on the market, or how many of you are actually bearish on the market? So okay, the time frame is within the next, within the next 1 month or so. If you are still bullish, type bull in the comments in the chat. If you are bearish, just type bear in the chat. So your bearish, you think it's a thick cat bounce within the next 4 weeks or so, the market will come back down again, that kind. Okay, so let us know. So at least, you know, me and Kar Yong will have some consensus to know what you are actually thinking, or what is you or what you are feeling about right now on the market. Okay, let us know in the chat or in the comments. Okay, so Kar Yong can also can you see the comments, Kar Yong?
Yeah,
You can,
I
right?
can see. Yeah.
Okay, fantastic. So have some consensus before you go into your sharing. All right. So I see bear, bull, bear. Okay. Let us know. Right now we have about 170 people in this room. So I mean your participation is very, very important. So I mean that we really want to know what the masses is thinking and such. So yeah, I mean that just give us a like, share, comment, engage with us. I mean that Kar Yong is very friendly. He won't bite. I will but he won't. So so he's friendly. So talk to him, talk to us and such. Okay. So let me see. So actually it's quite mixed, Kar Yong.
Quite mixed.
About
At the start, I see a lot of bears.
Yeah.
A lot of bears.
But right now, coming later, a lot of bull also actually, right? A lot of bull also. Yeah. Pei Wen say bear. Jimmy say bear short term, bull long term. Okay. All right. So okay, with such consensus, okay, I think I don't want to delay your time. I think you have a lot of things to share. So Kar Yong, please go ahead. Right now.
Okay, cool. Can share the screen, right?
Sure. Okay.
Okay, so yeah, as mentioned, I'll be sharing with you guys quite a bit of a different frameworks that I use to track the macro perspective of the market. If this is the first time you hear the term macro, is in short, you're looking at the big picture of the general financial market. So it's not really like any individual stocks or so. And the study of macro basically comes from the understanding of liquidity. And when we talk about macro liquidity, we are talking about how easy credit and money is being generated and flowing in the economy. So that's like this very simple and dilute version of understanding. Over here, I also want to bring out a quote as we are talking about the current macro environment. This quote is actually from Stanley Druckenmiller, right? So he's actually one of very successful macro trader, and if you look up into his performance and things like that, you realize that he actually beats Warren Buffett in terms of trading, right? But Warren Buffett is more like long-term investment, so slightly different. But in terms of his performance, it's actually very solid. Okay, so if you do not know who Stanley Druckenmiller is, you can do a simple Google search. You can find out a bit more about him. But today I want to bring out two things that he mentioned. Okay, so of course you know that 2022 is very interesting because we have very high inflation, but economy is not really doing well, right? And the inflation is caused most likely because of supply chain disruption, COVID, and then things like that. So I actually mentioned that if you look back historically, once inflation hits above 5%, which we are right now, it has never come down until the Fed funds actually get greater than the CPI, right, which is your consumer price index. So if you take a look at where we are right now, inflation stands as of the last data that we get in the US is about 9+%, right? And we know that the Fed funds rate is only about 2.75. And, while the Feds continue to increase rates, likelihood, hopefully, inflation will start to come down. So the first thing that we want to also take note of when we talk about macro is interest rate, okay? Because if interest rate is rising, naturally cost of borrowing is more expensive, and therefore liquidity is likely going to be drop or low, right? So that has a direct impact when we look into macro environment as well, right? When we talk about liquidity, interest rate all ties in together. So this quote over here, or I would say this statistics that was mentioned by Stanley Druckenmiller, kind of give us an understanding as to where would we see the end of the Fed funds hike. Okay, of course we won't know for sure, but this can give you at least a background information or something that you can reference to, right? So will the Fed stops at 2.75? Unlikely. Will we see more rate hikes moving forward? Very high chance, right? Because inflation is still super high. Okay, so this is one. The other part that he mentioned was that once inflation is more than 5%, it has never been tamed without a recession, right? So I think many people are also now thinking, are we going to see a recession soon, right? And then, of course, there are some people who argue that we are already in a recession based on a very traditional way of defining. If, let's say, you got 2 consecutive quarter of negative GDP, you're in a recession. Okay, so just some extra information in case that you're wondering what are some of the things that you can base on, you can reference to, right? Hopefully this information might help some of you. Okay, so with that, I study a lot on what Stanley Druckenmiller does as well in terms of macro. Okay, and this model over here is actually an influence from him plus another trader called Ray Dalio, which is also very successful. Okay, if you never hear of his name, just do a simple search. Okay. So this macro model is not very complex, but we do study a couple of different indicators, right? So you can see actually on the screen, we study the unemployment rate, ENFCI, LEI, bond yields, right? As well as non-financial leverage and CCC spread. Okay. Now, most of this information you can actually go over.
Try to zoom
zoom in a little bit.
Yeah, something a bit small for the audience. I believe so, right?
Cool.
Guys. Okay.
Okay, so we focus on here first, right?
Can see better, right? So if you guys can see much clearer now, just type yes in the comments. So I think so we know that everything is good, everything is okay, everything is good. Can see, just type yes in the comments. Okay.
Cool. Yeah. So these are the 6 indicators. And these indicators, the information are readily available on FRED. Okay. So it's publicly available information as well. And then what I did is I just put them into a spreadsheet, kind of systemize it a little bit so that there's a kind of scoring system for me, right? So I kind of then easier for me to be very organized in a way, and I say that, what we are right now, what macro environment are we in right now. Okay. So I've just updated this as of today, okay, to prepare for today's sharing. Macro environment, usually we don't update it, every week or so. Okay. Of course, in such today's context, right, you want to look at it from a month-to-month basis because things are really, really changing very quickly. But usual times, if everything is well and things like that, usually macro, you just need to look at it every quarter is more than enough. Okay. So I just want to give you a reference. Okay. At the start of the year, which is this year, 2022, right? The macro was somewhere around close to 0. Okay. Or I would say late last year, the macro scoring was 0. And then moving into, February, March, it went as low as -5, -3, -5, that kind of territory. And as of August, right now, we are seeing a scoring of 1. Okay. So what is this score here? Let me give you a rough understanding here so that you can appreciate the score too. Okay, the maximum score is 8. The minimum score is -8. Okay, and of course 0 is the neutral point. Okay, so this here, I like to reference it and say that, if we're in a green territory, generally the macro environment is suggesting a bullish environment. Okay, of course, it doesn't mean that the market is just going to keep going up every day, but we are in bullish environment means any pullback, any drop can be seen as a retracement or a buy opportunity. Okay. If we are in a rate zone, then naturally it's a bear environment. So you do not want to go and buy any pullback or bounce, right? You would then see as a dead cat bounce. Maybe if you're short selling the market, that would be an opportunity to sell, right? Somewhere in the yellow zone, which we are right now, is more or less like a neutral understanding or transitory phase, okay? So it's not like the clearest, but you want to then start to take note because it can really transit, right? From red, go to yellow to green, or green goes to yellow and then goes to red. Okay. Now, some of you might then start ask, how do I give a points to that? Again, each of this indicator would have different performance to it. Okay. So I just tag a certain score to it, right? So if, let's say, LEI is falling, it's not good, then it's a -1 score, right? And then some of them, if you just look at it, it's a little bit small here, but I hope you can see, right? So even like, for example, a rising indicator might be rising above 0, rising below 0. So from negative going to positive would have a slightly different score as well, okay? But I just keep it very simple, and then you just sum it, okay? And then you get a score, Okay, so as of today, what we see is 1, okay, which is definitely an improvement from last month. Okay, but is it a buy the market right now? Has we seen the bottom? Maybe not yet, right? Because if you incorporate what I've just shared with you just now, based on this quote, okay, if Fed is still looking at rate hikes, liquidity environment is not going to be loose, okay? It's still going to be in the tightening process, and it's not good for risk asset like stock market, okay? So I don't think that it's directly, I don't think it's a very strong conviction that we have seen the bottom, but perhaps what we're going to see is we're going to see a little bit of a pullback, and this pullback maybe might take 1 or 2 months. After that, we might still see more downside, right? So that's what I start to piece all this information together. Okay. Another piece that I look into is the economic cycle, right? So over here, I'll zoom in a little bit as well. Okay. Economic cycle over here is based on this study called the sector rotation. Okay. This is very helpful for us to understand which phase of the current economy we are in, and based on which phase of the current economy, we kind of would then have an understanding of which sector in the equities tend to perform better. Okay. So over here again, I track 4 different economic indicators. I think you can see consumer expectation, industrial production, interest rate, and of course yield curve. Okay, and again, I've updated it for you guys for today. So consumer expectation is still declining in an overall trend. Industrial production is falling in the overall trend. Interest rate is rising sharply. I think all of us knows that, right? Yield curve right now is actually inverted. Okay, so if I bring you to the yield curve chart first, okay, the blue line is the August yield curve. The red line is actually the start of the year January yield curve, right? So you can see January is still normal. Okay, it's still upward sloping. But as of today, you can see this yield curve is inverted or potentially maybe flattening. Okay, so a lot of people also start to look at yield curve and say that, oh, if it's flattening, it's bad for the market, it's a recession or things like that. To me, I think yield curve is just one indicator. You wouldn't want to oversimplify stuff and say that, oh, if the yield curve inverts, the market drops, right? They might have some coincidence sometimes, but I think if you want to understand the overall market, it's always important to add various perspective and indicators in, right? So this is the part where I study where we are in the economic stage based on these 4 indicators. Okay, and you can see that 2 indicators are pointing to us and say that the economy is already at a full recovery, and there are 2 indicators that telling us that we are already in an early recession. Okay, and this is actually very transitory, right? Which means that it's never gonna be fixed there forever. It's always gonna move, right? The economy is always changing. Okay, so we are definitely going from full recovery going into early recession, and eventually we'll transit to full recession, and then the whole cycle repeats from full recession goes to early recovery, and then yada yada yada, right? So why is this important? At least it gives you a mental prep that, okay, maybe we're probably going to go into a full recession soon. Okay, so for people who deals with maybe businesses and things like that, would need to prepare a little bit, right? Because if the overall economy really goes into recession, you want to time that a bit to protect yourself. From an investor point of view, understanding where the economic cycle is gives us an understanding of which sector to perform as well. Okay, and this one here, I'll bring this up. Again, you can see this chart. This is actually a study by Stem-Stovall, right? So you can Google Stem-Stovall model, you actually find this as well. Basically, it states that the economic cycle can be split into 4, and each of this cycle itself would have a certain industry that tends to perform a little bit better compared to the rest. So if you study where we are right now, we're essentially going into early recession, right? So we're somewhere between full recovery and early recession, the bottom half of that. Okay, so which sector tends to perform a little bit better? Utilities, and then maybe eventually starts to go into finance. And then if we start to proceed into full recession, then maybe cyclical. Okay, so we're somewhere between staple services going into utility finance and then eventually cyclical. Again, these are not like 100% textbook, right? Financial market doesn't work like math. It's not like 1+1 you always get 2. Okay, but these are again more like reference points for investors to take note of. Okay, so this also means that if today you are perhaps looking for maybe trading opportunities, or you're looking for investment opportunities, right? This sector here are where you might want to pay a little bit more attention, or if you're doing a little bit of portfolio balancing, okay, all this information might be helpful for you, right, to help you make that decision. Okay, and of course, I also look at the technical analysis portion of it. Okay, so this is a chart of S&P. Okay, just to very quickly show you what's my at least short to mid-term view. Definitely you need technicals to support the case, right? Because what I've covered just now in terms of like macro sector rotation, they're more of the big picture perspective things. Okay, so S&P over here, I utilize in terms of technical analysis, I use a lot of Elliott wave analysis to help me forecast and kind of prepare where can I look for opportunities. Is it bullish? Is it bearish, right? So technical analysis, I use it mainly for two things. One is to help me in the direction. Okay, so we call it directional bias. Do I focus on buy or sell, or not clear, we stay out. The other, of course, is timing, which is where to get in, when to get in, where to get out, when to get out. Okay, this is a chart on S&P. I like to keep my Elliott wave simple and practical. So the emphasis mainly is on more practical, right? So I don't have a lot of labels. I know some Elliott waivers does a lot of like internal labeling and then external labeling in terms of different degrees. To me, I don't really do that. Okay. In fact, I don't really do a lot of label, but some basic labeling is just to communicate the whole idea. Okay, so this is on a 4-hour chart, which is ideal for swing trading. Okay, so it's more towards, as I mentioned, short to mid term. Yeah. So over here, this is one pattern that I also shared during the Nasdaq event. Yeah. So if you actually watch that session, this pattern here wouldn't be too foreign to you. Okay, but for the benefit, I'll just quickly share and touch on this, right? This pattern here you can see is a combination of a very strong move initially, and then after that, there's a lack of momentum. Okay. Now, if you're familiar with RSI, most of the time, this would give us a divergence as well, right? So you can see here, RSI came down, price went up. Okay, so this pattern essentially tells us the momentum is lacking. There's a higher probability we're going to see a pullback or even potentially a reversal. Okay, of course, I always say this, right? We won't know for sure, is it going to be a pullback or is it going to be a full-fledged reversal and then the market just make another low, right? We never know that, right? But what we can anticipate at least is if you want to buy, at least for S&P, and if you use S&P as a general market consensus, then maybe not the right time to buy now, right? Because if this chart is suggesting that short to mid term, we can see a pullback, then why buy now, right? You rather wait for a pullback, confirm that it's still in a bullish environment, then only you get in on the buy, right? So you can see why I want to share with you this whole process is to let you also have an idea, like it's not just based on technicals, but how you can combine various analysis methodology and then formulate what we call a trading plan. Okay, so over here I also include a little bit of Fibonacci. I do use that a lot. Okay, so S&P over here, this drop, the minimum expectation that we can look up for is at least towards the 50 and the 618, which if you put that into a price level is, let me just type it in so that you can see it clearer. Somewhere around 4042. Okay, 4042. And the 618 is somewhere around 4012. Okay, so somewhere between 4010 to 4040 level. Okay, and this level here, which is 3911, the previous low before that very strong push to the upside, is going to be a very crucial level, because if the market breaks through that, then likelihood of this going all the way back to its previous low is very, very high, right? Because that would then tell us from an Elliott wave perspective, the market is developing into another pattern. Okay, so for it to be bullish, it needs to see some support around 4042, 4012, and it needs to maintain above 3911 from a technical perspective for S&P to remain bullish. Okay, yeah, so that's my view on the general market as a whole. Okay, very quickly, I also want to touch on gold. Because I think gold over here is one that I've covered also in the NASDAQ event. And I call this trade of the year. Okay, of course, right now, we're almost end of the year. So this one here is something that you want to keep an eye on, even moving forward to next year. Okay, when I call a trade idea trade of the year, what it means to me is that if that year there is one opportunity or one asset that I want to really focus and emphasize on, it will be this, right? And that's why I call it trade of the year. And the whole idea of it is that there's a lot of upside opportunity. The profit potential is huge. Therefore, I'm very into it, right? Now, why is that the case? Let me very briefly just share with you from a technical point of view first. Gold has been consolidating in this area since this is what, 6th of August 2020. Okay, it hasn't broke this level since then. Okay, and of course recently it tried to test it, it did not break, it bounced back very strongly. And even if we just look at somewhere around here, capitalize it to the recent high, right, which was around $2,075, the upside is already huge by itself. Okay, but if you go and study gold itself back in 2008, 2009, when there is the, again, financial crisis and then inflation hits in after that, you realize what happened was, let me bring you that. Okay, was after that there was a huge rally in the precious metal space. Okay, so of course I wouldn't know for sure what's going to happen next year, whether this huge rally in the precious metal is going to come. Okay, but I would say if this hits the previous high, I'm already very happy. But the final expectation of this is that it breaks through and it just goes all-time high again, which is possible, right? Because if you account for inflation, and if gold is still one of the precious metal that people look at it as a safe haven asset, then naturally, our currencies would always be in a devaluation stage. I would say devaluation process, right? Because of how that is accumulated, and then the only way out as of now is to keep printing to devalue it. So there is a good chance we might see another all-time high in commodity space in general. Okay, so just want to highlight this in case you missed that. I just want to highlight the opportunities in gold that I'm personally looking out for, and hopefully that also bring your attention to it so that you're aware. Cool. Okay, so so that's a little bit here and there of what I've prepared. Again, very casual. I hope it does give you guys a little bit of insights, right? Then of course we are open to like questions or anything up for discussion or conversation.
Definitely. Okay, I mean that I see Kar Yong, this Excel spreadsheet. It is pretty interesting. I mean that how many of you find the spreadsheet interesting? Kind of counting the scores and such. Okay, and you can see that Kar Yong give a pretty kind of broad macro outlook. Using a very systematic approach. It's not that kind of like I feel that the market it is going to a recession and the market's going to do. He kind of quantify every single data that is available to you, okay, by the Fed or by the whatever market, and it kind of have a very objective way of looking at the current state of the market right now. Okay, so if you think this is useful to you, okay, based on what Kar Yong shared just now, okay, just type yes in the chat. Just type yes in the chat, okay? So because the chat is getting a little bit quiet, okay? So just type yes in the chat if you think that this, sharing by Kar Yong is useful, and how's analysis of the S&P and also the gold, okay, is kind of useful to you. Okay, so thank you, Wheeling, Han Hawk, Kenny, and such. Okay, yep. Let the comments flow through and also give us a like, share, and also just comment. Okay, to engage with us. And this also tell Facebook and also YouTube that you want to see more of our content in the future. Because if you don't do that, Facebook, YouTube, think that you don't like us, you don't like Kar Yong. Okay, in the future, it is not show you MarketWise Asia, our content on your Facebook and on your YouTube as well. Okay, all right. Let me see. So a lot of yes, definitely is useful. So Henry is asking, hope we can have the spreadsheet. Okay, this is not something for me to decide. You have to ask Kar Yong, okay, later, okay? And then let me see other question, right? Darius is asking, can go through all the lines in your Excel sheet, how you determine the number for each factor. Maybe just briefly go through again, Kar Yong. Is that okay with you?
Yeah, okay. Can see, right? Okay. So for example, just show you one, then you get the idea of it, right? So like for example, this one, ANFCI, right? Just I mentioned, it's actually it's a data that is freely available, right, from Fred. Of course, for my ease, I actually highlighted the link between it. So that's why I just click, I can come over here. So what you realize is that ANFCI, it tracks certain things. If you want to study a little bit more, of course, you can go into the details of it. But you do see from this chart here, basically we have a zero line, right? So the first thing that I look at is ANFCI above zero or below zero? Okay. And of course, you don't just want to know whether it's positive or negative. You also want to know the changes from ANFCI, right? So is it rising? Is it falling? Then you want to know, is it rising in a positive territory or rising in a negative territory, or falling from a positive territory or falling from a negative territory? Now, again, if you take a look at this, most of the time when ANFCI actually crosses from negative to positive and it going up, right, it's increasing. What it suggests soon is that we have a recession. So basically from Fred chart, the gray out zone that you see, they are all our previous recessions. Okay. So what you then look up for, of course, I don't need so much data. I can click on 1 year over here. It just basically shows me what are some of the reasons. So I just studied the trend, right? So right now we're in August. Of course, this is the latest data that we can get. So what's happening recently is that ANFCI is falling and it has dropped back below the zero territory. Okay, so what I do in my model over here, again, I have 4 options, right? Okay, so falling and it's right now below zero. So why is there a score of 2? Is because it's actually, if this is falling, if this data is falling and is below zero, it's actually good from a macro standpoint. Good means good for the stock market. Okay, means likelihood of bullishness, right? So that's why I give it a score of 2. Okay, so if let's say now it's rising and it's worse, right? It's in a positive territory, it's gonna go into -2. Okay, so that's how I give it a score, right? If it's good, then it's either a +1 or +2. If it's not good, it's either a -1 or -2. Okay. So same thing over here. If you take a look like this one, right, which is Moody Season BAA bond yield, right? So this one here, again, we track, it's more like whether is it increasing or falling, right? So right now it's a little bit of the like top-ish, okay? But general trend seems to be rising. Maybe if, the next data comes in, it really drops a little bit more, then we'll change it to falling. But as of now, it's generally still rising. So over here, I put it as rising, right? And rising is not good for macro standpoint. Therefore, it's a -1, right? So eventually, if maybe next month it starts to fall, this will go into 1. And then if everything else remains status quo, then we have a 3. Okay. And that means that we'll probably be more convicted or confident to say that, oh, the market perhaps has bottomed, right? So hopefully that helps. So every of this indicator here, there's a score based on this principle.
Yeah. So what you are saying that essentially is just to go to the data and see whether it is falling or is it rising, and based on the data that you see on the site, for example, from the Fred, and then it's falling, then you just just drop down, just put falling, and you auto give you the score. Oh, this is pretty interesting. This is interesting. Okay, so that you can see that Kar Yong have this very interesting spreadsheet. I can see that, you know, the way he analyzed some of this data is sometimes I don't even know. For example, like this adjusted national financial condition, ANFC. To be honest, I don't know it. Okay, like this. What is this CCC spread? Maybe you want to share with us this CCC spread.
Okay, so each of this model is actually 6 indicator, but if you kind of go deeper, right, it's actually 3 consider long-term indicator, 3 are short-term indicator. So the first 3 are basically long-term indicators. Long-term indicators, what it means is that it usually forewarn you about 6 months to 1 year before a potential recession kicks in, right? So you have like long-term perspective of that. The short term here is usually a duration time horizon of 3 to 6 months, right? What it means is that there's a good chance something might happen within that time frame. Okay, so I basically just put all of them together, and I just give them equal weightage, right? Because I don't want to overcomplicate it. But since we are talking about it, I think give you guys a background understanding also. 3 of the top 3, the first 3 is actually long term, so it's more of a horizon of 6 to 12 months. The next 3 here is more of a short term, which is 3 to 6 months. Yeah. So when we talk about 3 to 6 months, generally what we're looking at is like, for example, the bond yield, right? Corporate bond yield, even CCC spread is actually something related to options. We are basically studying this principle of risk on, risk off as well, right? So generally, if the market is uncertain, is fearful, we call it a risk off environment. So during a risk off environment, especially these 2 indicator, they will tell us that we're in the risk off. Okay, of course, there are more things that you can track for risk off. You can look at currencies related. You can look at weights, for example. Okay, so I want to say it's not like these are the only indicators to track. Okay, but these are the indicators that when I study Stanley Druckenmiller's work and Ray Dalio's work, these are the indicators that they shared and they mentioned. Right, so just want you to know that it's not like this is the only one, yeah. But the model, the framework is generally there. Yeah. So CCC spread, you can see over here, the full name is actually over here, options adjusted spread. So it basically studies a little bit in the options market. First, I'm not an expert in option, so I did not go like very full on into like how is this economic indicator is being actually calculated. I didn't go into that kind of details, but I just basically study again, if this indicator starts to rise, especially if it's rising very, very fast in a very short span of time, it's telling us that a possible bear market or market drop is coming or recession is coming. And if this is generally falling, it's good for the market, right? So that's what I study in terms of that indicator. But if you ask me like how to find the formula behind it, I don't know.
Okay, interesting. I mean, this is good enough really. So for those who want to really go and just, dive deeper into that, can just go and Google. I mean, Google is your best friend. So I think that's good enough. And you guys can see actually the way, how Kar Yong analyze the market, how he trade the market. It's a very, very different from me as well. So that's the reason why actually I want to introduce Kar Yong to share with you, his way of analyzing the market and how he trade. Okay, and talking about that, right? I mean that those who attended the Nasdaq Trading Festival, you should know that Kar Yong actually has a program that allows you to dive deeper into how he really analyze and trade the market. Okay, maybe Kar Yong want to share about that. And of course, okay, just to let you know, okay, this is purely optional, but I really think that this is a very good course by Kar Yong. I think that just take a look at what he can offer. Okay, for those who are still sitting on the fence, okay, you might want to consider once again. Okay, and maybe Kar Yong can share with them what's actually inside your whole mastermind program inside actually.
All right. Okay. So because I think after that, some people are also interested to like, what's next? How do I get all the tools and the methods, right, that we use? Again, it's not a one night thing or overnight thing that I'm able to share all this information. It's probably going to take like weeks or even months to cover everything that I have. And that's the part where I've actually decided, hey, because throughout my years, I built up quite a bit of different content, right? Different methods as well, fitting for different interests, depending on people, the traders and investors' direction as well. So these are just to very quickly show you everything that I have in English, right? So the one that there's gray out bottom here, they are in Chinese, okay? So it's irrelevant as of today. So I do trade mainly on the FX market, and then I invest in the equities market, okay? So because of that, a lot of the content and the materials I prepare are also in this direction, right? It's because I'm doing it, it serves me, helps me to facilitate process, and therefore I also build up a content or even tools for that, right? And then eventually I just turn it into a course to spread, and share with more people. Okay, so if you take a look, some of the contents over here are related to stocks. Like just now we cover a little bit on the macro and sector, right? So this is actually inside here where I've actually all the toolkits. Today we only share two, but there are more than that at the top over here. So these are all spreadsheets. So this is under the macro and sector, and then of course inside the dividend mastery toolkit is where I do dividend investing. And this course here teaches you what is the approach that I use to find out dividend stocks, how I manage my portfolio, how to do rebalancing, and of course, all the tools inside to help you manage that as well, right? To help you select stocks, help you manage your portfolio. Trading over here is more on FX. So this one here is an introduction to FX trading. I use mainly Elliott Wave method, as I mentioned. So this is where the Elliott Wave Mastery course comes in. The Elliott Wave Mastery course is, again, not something that I can cover within like 2-3 hours, right? It takes actually 2 or 3 days to just cover the concept, and then it takes a lot of practice. So that's where the Elliott Wave Mastery course is designed, so that it allows the traders to self-pace themselves, right? And within the Elliott Wave Mastery course is a technical analysis approach, which means you can actually use it in your stock trading if you're doing it, in indices trading if you're doing it, or of course you can do it in FX, right? Or commodities like gold. And the beauty about Elliott Wave is that number one, using this method, it allows you to forecast the market. Okay, so like what I did just now in sharing with you from the S&P market, right, is actually what we call a forecast, where we see a certain pattern happens. We can start to prepare what is the highest probability direction that it can develop. Of course, not 100%, but we can then keep track of the market as it continues to develop. We can then project what's likely going to happen next. Okay, and of course, if you start to go in depth, which we talk about it in the training as well, is to help you project like where, right? So why would I put my fibs here? Is because there's a high chance it's likely going to go there. Okay. And then why would we have this level here? Is again, this is a key significant level. If that breaks, it changes the entire pattern. And then then you need to start to reanalyze and reassess the whole situation. Okay. And then of course, inside it, we cover how we're going to get in, get out, where's your entry, stop loss, take profit, etc. Right. So that itself is what I would say is a complete technical analysis course, right? And then we have the Mastermind group. Inside this Mastermind group is not a training, but it's basically more of like a service where I just provide you what I'm trading, what I'm looking at, and then if you decide to follow, you can do that, right? If you want to use it as some ideas to help you in your trading and investing, you can do that as well. Okay.
Is it the seasonal that it is inside this Mastermind as well?
Yeah. So I'm gonna show you, because it's quite a broad-based thing. We do FX trading, so you have like the FX trade signals. We do stocks trading as well. So this is based on seasonal. So we have like this. If you're into stocks, then you, of course, this relate to you. I share with you the dividend stocks that I hold in my portfolio, so you have that as well. We do growth stocks investing as well. So this is the portfolio for growth stocks. We do momentum stocks trading in NASDAQ. So these are the ones. And then we do portfolio rotation as well, which is more for like conservative. Right? So this is where, I can't say the mastermind is for who? Because basically it's everything I do, I share inside. Yeah. So I do stocks, I do FX, I do majority of the stuff in the financial market except options. So that's where everything is included. Yeah, so I just want to also very quickly cover, in terms of like Alex mentioned about seasonals. Of course, 2022, the stock market is down, right? And seasonal trade ideas, we use it as a buy only strategy, right? I don't do short selling in stocks except for very short term using CFDs. Okay, so of course, the seasonal trade ideas for this year alone is not that great because everything is falling. Okay. So this is something that we do as well, but I believe once the market starts to bottom, again, based on macro, everything supports a bullish environment. Seasonal trade ideas is where we study in the past what are the statistics of a certain stock rallying in a certain period of time, and then we share with traders, hey, during this week, these are the stocks you want to take note of, right? And then when to get in, when to get out based on a specific date. We also have the Telegram group, right? So just to share with you, this is the short-term seasonal trade ideas, which we do both direction because currently the market is, choppy, right? It goes up, it goes down. So we do short-term trading on that. And again, these are mainly for CFDs trading. Okay, so short sell is a whole different ball game if you do actual stocks in short sell. So that one, the risk you need to go and manage yourself. But CFD is easy, yeah. And then this one is where we look at FX market as well. Okay, which I just share, what are the trades I'm taking, post it up into the Telegram chat group, and then traders can decide to follow, or they can decide whether they want to use it for their ideas and reference to their own analysis and things like that. Okay.
Actually,
So
for those who
basically,
have been, for those who have been watching me for the past all the Facebook Live, you should know that I always talk about seasonals. So this is not something new to you already. So this is like, Kar Yong did all the dirty work for you. Whereas I don't have to. He basically he's like give you the trade ideas like what I've been sharing with you every single week. Just that he will send to you and let you know what are the stocks that is moving and such. Recently, I talked about that the technology sectors is actually based on seasonals is actually quite bullish in the month of July, okay, and moving into August as well. So you can see that right now, in fact, technology is moving up very nicely as well. So this is what Kar Yong it is doing, okay, to help you find out all the potential trade ideas and such. All right, so you can see right now Kar Yong is showing
give you
some of
guys
the
one tip.
yeah.
Like upcoming, we have CRM, which is Salesforce, right? On 18th of August to 18th of September, which is relatively short. Usually we don't see like 1 month, but this is 1 month. And then we have the statistics of 80%, which means based on past 10 years, 8 years, CRM tends to rally.
Yep.
So the average rally is about 8.88. So that gives you a reference of expectation. Doesn't mean that this year is going to do 8.88 rally. But you have an idea of like, is it worthwhile, right? So if you take a look at it, 1 month duration on average, you hold it, you can make 8% or 9% of that position. I think not too bad, right? So that's something that this is what we do. So we provide that stats for the traders.
So it's not a sure win, just like for those who actually sign up for the Nasdaq Trading Festival, you should get the sectors cheat sheet, right? Inside, I also put that software services, during this month of August is generally bullish, and this is actually very in line with what Kar Yong is sharing right now. CRM, Salesforce market, and software as a service and such. So this is what he is doing and what I am doing as well. So this is, I think, is definitely very, very useful. I can vouch for that. Okay, again, this is one part of what Kar Yong is sharing. So yeah, Kar Yong, just want to share with them, what exactly the offer that they can get. I believe the Nasdaq Trading Festival, the offer price still stands, right? So let me just post the link in the comments. Just go through very quickly, the landing page about the offer that you have. Let me see.
Okay.
Let me just post the comments inside the comments. You can see the link, okay? eSmartmastermind.com/marketwise. Yeah, okay. All right. So, and you should be able to see this banner also. Okay. So yeah, just head over.
This one, yeah.
Yeah, this is the one. That's the one.
Oh no, this is not. Wrong one.
You want to click on the comments. Are you able to see that?
Yeah. Okay. So to just cover a little bit, this is the first time also I decided to put everything in for you guys as an offer, because again, some of you might be into FX, some of you might be into stock, some of you are doing both, some of you are thinking of getting into either of this. So my decision is, just give you everything I have to help you in this journey lah. So you don't need to make that decision which one is better or which one should you be doing. Just take everything. Yeah. So again, if you do go into on my website, right, and go and search for each of these individual courses and services, they add up to more than actually 3,000, right? These are not like rough figure that is plugged. If you go and add up a la carte, everything you add on, that actually adds up to about 3,000 plus. But again, today you're able to get it together with MarketWise Asia over here for just 594, and 594 is not in the US, but it's in the Singapore dollars lah. So it's actually, if you divide that, it's actually less than $2 per day.
Yep. Yeah. So I'll just once again show the banner on the screen. So it's eSmartMastermind.com/marketwise2022. Okay, you should see this, if you're interested. If you watch the replay, okay, if you can't get the link and the comments, one last post about this, because I also don't want to go too much, keep talking about that. Those who see the value, it lah. I can see the value lah. Okay. Anyway, so I actually met Kar Yong on Friday, right? I met Kar on Friday. So he was talking about his Elliott wave and such. Okay, how many of you actually find Elliott wave very subjective, a mystery? You have heard of it, but don't know how to make it actionable and such. So you find it very mysterious, difficult to really trade using Elliott wave. Just type me in the chat box, so at least I know. Or at least I know that I'm not alone. Even though I'm a certified financial technician, I told Kar Yong, hey, Kar Yong, I also studied Elliott wave, but sibei jialat all the 1, 2, 3, 4, 5 the ABC they're all very subjective. I don't know how to trade, even though I'm a CFT. So I read already, all I've forgotten already. Okay, so you can see that there are quite a number of me. Then actually Kar Yong enlightened me that actually you don't have to follow the very classic, what we call the blue book. The blue book.
I have.
You have the blue book. Okay, show them the blue book. This is the book. Okay, this is the book. So the CFT, I also studied this book. So very, very difficult to understand and very subjective. So actually, Kar Yong kind of simplify to me, how to trade. You don't have to really follow that book. There are certain steps you just need to do and such. So actually, I also learned quite a bit from him. Hey, I can actually simplify. I don't have to follow the blue book. Okay, I just have to follow Kar Yong. So Kar Yong is also one of the methods to make me cut short my learning curve lah. So I'm always into learn new things, and there's always new thing to learn. And Elliott wave is something that is on my mind right now, wanting to learn. So definitely I'll be also watching Kar Yong's video as well. Okay, this is just a side sharing. Okay, so if you want, you can just consider Kar Yong, how he used Elliott wave to actually pinpoint his entry and exit, and that will be included inside his mastermind course as well. All right. So so I mean that we are right now into the 1 hour mark. So so I think Kar Yong has covered his part on his macro and some of the trade ideas on the gold, and also potential target on the S&P 500 and such. For me personally, right now, okay, I'm going to just share with you also some trade ideas and how the market is actually doing right now. So actually, I mentioned. Let me try to share my screen. Okay, so you guys can see my Telegram, right? So I think quite a number of weeks ago, I think 4 weeks ago, I mentioned that XBI, the biotech, was actually quite constructive and there's a chance for another leg up. So XBI today, in fact, even surged higher when I was, while Kar Yong is actually presenting. I was looking at various charts. So biotech is still, still surging. So how many of you actually is holding XBI right now or holding any of the biotech stock? Even though I ask you not to copy me, I am sure, I think that some of you might have entered. If you have some position in biotech or some of the biotech stocks, XBI, just type XBI in the chat. Okay, so let me go through the chart once again. So today you see that XBI, while the market is coming down, XBI, this XBI chart is still surging 3.25%. So 3.25%. Okay, so previously it was the leading industry, and right now, after a period of consolidation, okay, so it is surging up again. So this is a good sign. And for me, looking at the market, I know right now the market, it is down. For the S&P, it is down about 0.64%. The Nasdaq is down about 1.28%. But right now, you guys can see, for me, is that it has broken above the cloud. For at least for the Nasdaq, it has broken above the cloud. And as I mentioned last week on my Facebook Live, right? Last month was the first month that it actually stayed above the central pivot range. And this month, it also stayed above the central pivot range, at least for now. So if this month, if price continue to stay above the central pivot range, it will be staying above the CPR for 2 consecutive months. That's what I'm saying, right? So to really kind of define, right, really it has turned from a downtrend to an uptrend. Price has to be above the CPR for 2 consecutive months. Okay, so like what Kar Yong has mentioned about the macro and such, right? So this is something that is useful to me. At least I know what's happening to the market. So but at least for the short term, at least for myself, from the trading perspective, right? How to be actionable? Okay, how do you pinpoint when to enter and when to exit? Okay, so this is my part of my sharing. Okay, just a very quick one also. Like last week, okay, like what kind of mentioned, right? So we are into a technical recession also. Okay, so for the past 2 consecutive months, the GDP growth is negative. If you want to go to the link, you can go to this site, Trading Economics. You can see that it's actually down for 2 consecutive months over here. Okay, can you see over here? All right, minus 1.6 and minus 0.9. All right, so all these are late news, already old news that you should already know. Okay, so but do you know that actually the S&P 500 is now trading above 15% above its June low, and the Nasdaq is slightly doing even better. It's up about 20%. Okay, all right. So it is very funny. You see that previously you said that rate hike is causing the market to go down, then recession, it is causing the market to go down. This is what I feel that a lot of people, it is hinging on the news. Okay, the market should go down because the news is bad, the economic data is bad, everything is bad. It should go down. But why is it not going down? Okay, I'm not sure whether does this confuse you or not. So if this confuse you, okay, just type me in the comments as well. Okay, but for me personally, okay, my opinion is that if you trade the news, all right, what you hear and read from the market, right, okay, and instead of watching the chart, like, just read the news, right? The recession is coming, okay? The earnings is going to be very bad, the rate hikes continue to go even higher. And then if you short the market, right, you'll get killed. Get killed meaning that you get stopped out. So, but the key thing is, right, the way it's trading. So to me, right, trading for the short term within trading for a swing trade for a few days to at most a position trade for a few months, right? I think watching the price is very important compared to reading what's happening in the news right now. So like what I mentioned, right, the rate hike, recession, inflation, earnings fear, and all this, right? So to me, at least for me, right, focus on the price. If you are trading short term. If you are those long-term investor, then you might have another way to trade the market, know the fundamentals and everything. I admit that the fundamentals do affect the overall stock market. But if you're talking about short-term wise, I would believe that focusing on the price is the best way to go. But you need to know the news also. Reading the news to understand what's happening and what the masses should be thinking and should be feeling as well. I'm sure that a lot of people be thinking, hey, it's going to get even worse. Recession is coming, more retrenchment and such lah. But there's a saying that if you don't read the newspaper, all right, you are uninformed, all right. And if you don't read the newspaper, you're uninformed. If you do read the newspaper, you are misinformed. So to me, is that at least for me, short term focus on the price. And again, I know this can be a kind of belief that you might not believe me in a way that I always feel that trading is like a religion. You have a very strong conviction or belief how the market is going to do, why the market is going to do this way. If I tell you that you shouldn't do this way, you might feel offended lah. Nowadays people get offended very easily everything also get offended on. But for me, it's like, yeah, it's like religion. But for me, what works for me is that focusing on the price. At least on a technical perspective basis, trading basis. All right. So if you actually agree with me, all right, just type agree in the chat box in the comments. If you don't agree with me, it is totally fine as well. I respect your views, because this is why the market, it is so dynamic. Everybody has different way of thinking. Everybody has different way of trading the market. Once again, do engage with us. All right. If you agree with me, just type agree. Don't agree, it is fine as well. Just type disagree. So I think talking about the chart right now, I just want to give a very quick brief idea on what I feel that coming week or so, where is the resistance and where is the support. Where's the support? All right, so talking about the S&P 500, right? So I can see that price has broken above the cloud, all right, based on the daily time frame, all right. But if you look at the weekly time frame, all right, we are actually still below the cloud. I know the chart can be a bit messy, but never mind, just focus on the candles, right? So above the cloud, above the cloud, you guys can see right above the cloud, below the cloud bearish, above the cloud it has been bullish all the way. This is the weekly time frame chart, and then right now we are still below the cloud. We are still below the cloud. So longer time frame perspective into the months, into the years, we are still broadly in a downtrend. But right, daily time frame, all right, we are in uptrend. So how to reconcile this kind of daily time frame, uptrend, and longer time frame is downtrend? So for me, the longer term time frame, you have to put more weightage lah. So in the grand scheme of things, longer time frame, we are still in downtrends, and which means that right now we are in a like what Kar Yong said, right? This is an impulse move. This is a corrective move right now. So we might be potentially hitting into a resistance right now. So let me just share this with you. This yearly pivot over here. Yearly pivot. Oops, this is the one. Yearly pivot. So can you see this black dotted line over here? These are the yearly pivot. I have no time to explain monthly pivot if you are new to me, but doesn't matter. Just let you know that these are the resistance level. So right now, the yearly pivot is for the S&P 500 futures is at about 4226. 4226. 4226. 4226. So so once price hit there, I think we could see further resistance, and price could just go up like that and then come back down a little bit more lah. So of course, how deep the correction will do, I don't know. It can just go up a little bit like this and then come back down and go up, or it can just go back all the way down. Nobody knows, but I believe that once we hit about 4226 level, we will see some selling, and this also coincides with the standard of support resistance. We are also near the prior support and resistance as well. All right, so it's about there. And if you then zoom back into the daily time frame, right, we are almost there already. We are almost there already, 4226. Okay, I remove all the previous line first, okay? Not to confuse you, or can just see this black dotted line over here. So price might continue to head higher. You can still try to go long on a shorter term swing trade perspective, but I feel that the upside, it is not there. The risk versus the reward, it is not there really. So 4226, I feel is the next resistance level. But meantime, I think right now price might still have the potential to go higher. Okay, I think XVI is fantastic. Okay, it's still going higher, but be careful when price S&P hit 4226 level. And talking about some of the trade ideas, right? Just a very quick sharing with you. All right, so if you go to this etfscreen.com, which I mentioned previously in my Facebook Live also, okay, short funds, leverage funds, and all these 500,000. Okay, yeah. If you look at the 1 month time frame, one of the best performing ones are some of these are clean energy, alternative energy. Okay, so like clean energy, semicon is still pretty strong, and then what else? Hydrogen, which I discovered also, and then solar. So a very quick one. For example, okay, you can see that, okay, back to my chart over here. Okay, so like solar energy, the ETF ticker is 10, TAN. See that it is also pretty strong recently. So these are all these alternative, energy stocks are in play. It is pretty strong. And if you're talking about hydrogen, there are a few ETF. I think it's HBRO, hydrogen. Okay, it is also pretty strong recently. All right, it's pretty strong recently. And then HJEN is another one. I think there are a few hydrogen ETF lah. Okay, so if you want to know what are the component stocks in this hydrogen ETF, very simple, right? Go to etf.com/ for example, HJEN, right? Then you know what are the component stocks in this ETF. Okay, just do a very quick one over here. See, direction hydrogen ETF. I don't know how to pronounce that, but doesn't matter. Okay, so you can see some of the stocks like top 10 holding, Plug Power, Bloom Energy, Ballard, Linde, Power Cell, all these are the hydrogen ETF. Okay, and then what else? Clean energy. Clean energy is ICLN energy. All right, can see that. Oh, also pretty strong. All right, pretty strong. So as I mentioned, some of these sectors that I'm looking at, it is this alternative energy kind of sectors, ETF industry, hydrogen, clean energy, solar. Okay, so if you understand what I'm trying to say, just type clean, CLEAN in the chat. So at least you know what I shared just now. Just type clean in the chat. Okay, and then what else? There are some other things that I want to share, but I think it is getting a bit late already. So yeah, back to Kar Yong. Okay, besides the S&P and gold, right? What are some of the other, for example, Forex pair or other things that you're looking at? Maybe you can share a few of these trade ideas to the audience. I think they'll be very interested to know as well.
Okay. Let me very quickly bring this up. I would say in terms of FX, right? It's actually worth to look at right now the euro dollar. I mean, depending on how you play it, are you gonna play it short term or are you gonna play it for the big macro trades lah? Why I'm looking at euro dollar, from the big picture perspective first, I think I covered a little bit as well with regards to Italy sovereign crisis, right? Basically, Eurozone is in a bit of a challenge itself. And if that is not going to be solved positively, we're probably going to see the euro suffer. And of course, when euro suffer, then euro dollar itself would drop, right? So that opens up for a huge, big potential macro trade on the FX side of things. So if you go to like, higher time frame, we have already recently tested the parity, right? Which is €1 equals $1, which is somewhere around this zone. But you can see that euro dollar actually reached below parity before. Okay, this is back in like 2000, close to 2000 to period of like 2002, right? So the idea here is do keep an eye on what's happening in Eurozone, because if that really cracks, it can really send the euro dollar way lower. Okay, that's on the macro long term, right? But of course, doesn't mean that every day the euro is going to fall. So right now, for a shorter term perspective, I think you can see a bit of my analysis here. There's a good chance euro dollar would do another pop back to the upside. So this is the part where you can see a bit of label, a little pattern over here as well. This is what we call a potential expanding flat developing. Okay, this is still a little bit early. So likelihood of this coming down a little bit more. And then from here, this is where it's slightly going to go back up. So euro dollar looking for upside for the short term. Okay, if you're doing swing trade, so if you're looking at like a couple of days, then the upside is interesting, right? So some of you might be asking, in terms of like, how do we get involved in things like that? Show you very simple one technique. Okay, of course, there are many ways you can get involved in the trade. This one over here, you can use a little bit of fits because Elliott wave, a lot of times it works with Fibonacci's, right? So this is the part where if you are seeing this pattern over here, okay, which is looking very obvious right now as a potential expanding flat, which is one of the pattern in Elliott wave, the ratios that likely is going to complete is at 123.6 extension. Okay, so a lot of times people have the idea that is subjective, right? Just now you guys also type me. So I just spent a bit of time to explain on this, right? I mean, when I first got started, it's also very subjective to me. But as you start to understand and appreciate Elliott wave, it's actually, there are sufficient guidelines within it to actually help us better understand how we should forecast and analyze it. Okay, so one of the principles that makes it easier for application is that when you're looking at a correction, you always expect three wave, right? So you always expect the market to go 1, 2, 3 to complete one set. Okay, it's not 100% of the time it's going to do that, but a good 80-90% is going to happen, right? So when I talk about three wave, you can see this move up, then from this peak, it came down, it went up. Right now it's doing this, right? So this is actually a set of three. Right. So again, this is like guidelines to help you understand when is this correction is going to end. If you don't see three wave clearly, then maybe not there yet, right? So if you start to see, oh, very clear now, we have a three wave, we have a little bit of ratio that can guide us, that becomes a clear pattern, right? So in this case here, one way to look up
Sorry,
for trade.
just to interrupt. This is a 4-hour chart, is it?
Yeah, 4-hour chart.
Okay.
Yeah. So so like for example, entry here based on this pattern will be around 123.6, which give you a price point about 1.007 lah. Then again, using Fibonacci, it gives you an idea of where this pattern should not exceed, right? So it shouldn't exceed that point. If it exceeds, then it's no longer valid. So that becomes your stop loss point, right? So from Elliott wave perspective, your stop loss should be at the point where the pattern no longer valid. So a very conservative way, of course, is this low here, because as long as the market doesn't touch this low, we are still in an overall upside from Elliott wave perspective, at least one more time, right? So why I say at least one more time, again, back to that three wave expectation, because you have this one, then within this, you have a 1, 2, 3. So you have the fractal nature of the market, right? Which means small, 1, 2, 3, then you have big, 1, 2, 3. So in this case here, you can see 1, 2, 3, right? So this then would complete one set of it. Okay, so that's why we're expecting this. Okay, so again, the subjective part comes in because how do we decipher this? But the guideline of three wave help us to understand we will expect that until proven otherwise. So we have like a framework that we can keep using for it. So in terms of this, this is how we can set up a potential trade, right? Entry at 1, 2, 3. Then you use what we call a pending limit order. Your stop, if you're aggressive, the 1618 is where it's suggested to be. If you're very conservative, you want to put it below that previous low, then your target, you can use the 100% over here, okay, which is again using Fibonacci expansion. We measure this move up, duplicate that to the end of this correction, and then you duplicate it. So it's like equal move, right? So that's the basic part of how we put targets. Yeah, so in terms of euro dollar, this is one of the example in terms of short term. So if I clean up all my drawing, it looks like that, right? So the risk reward ratio you can see is pretty decent as well. 1:2.6, right? In a very conservative way of putting stop. If you're more aggressive, then your risk reward increase to like 1:4.4. So a lot of times, Elliott wave, when you utilize that to help you find your direction and to find entry, you can actually get an average about risk reward of 1:3. But of course, that does not mean every trade you're going to win 3 times. There will be losses, there will be break evens, there will be trade, you manage it, you throw stop loss, and then you get up, maybe not 3 times, but maybe 2x, 1x. So euro dollar is definitely one that you want to keep a very close watch. The other one that you might want to start pay attention to, recently I talked about was euro odd, but now it's a bit complex, so I don't want to touch on that for today. Dollar cat is another one. So I do share this thing called the trading dose. Every day I share one chart. Today we share about this before NFP, and just so happened, again, I like to call it NFP was the catalyst to push the price up. Okay, so maybe I'll zoom down a little bit to again show you the principles of tree and how to utilize Elliott wave to actually get involved in trades. So euro dollar, we talk about that push and then the correction, right? So this one is rather similar, and you can see the tree wave within it. So from this peak, we have that 1, 2, and then 3, right? So again, that's where the tree principles tends to play out very, very often. So one way, of course, you can get involved at the bottom here. If you utilize a bit of Fibonacci's again, you can use retracement, you can use extension. Retracement is about 50 and 618 around this zone. If you use extension, that will be an equal move, right? So that 3 move here did happen, right? So if you take a look at it, right? Perfect example. Of course, not all the time perfect, okay? Over here, I usually use the 1618 as a stop as well. Okay, so one entry technique is you look at almost at the reversal point and then you try and catch it. Okay, a bit aggressive. The other technique in which you can use to enter is, of course, the breakout technique. Okay, so same thing here. You see this 1, 2, 3. You saw that this is completed. Okay, and then you wait for it to break this high. Okay, and when that break, you get in on that breakout, right? So there are generally 2 techniques. One is we call breakout, which you wait for confirmation, and then the other one is what we call a reversal. Okay, so I'm sharing you this is because you also want to start paying out attention to this zone, because if this continue to climb up here, then what we have is we have also what we call a potential head and shoulder pattern. So this is a bit traditional technical patterns, right? But it kind of aligns with Elliott wave as well, because what we have is that we have this first wave of a drop. If this is going to be a pullback, then this is only 1 and 2, right? Again, we expect a third drop, and this third drop might come in line with the traditional head and shoulder pattern, right? And if that happens, you get a possibility where this can drop all the way back down here, which is again using simple way of targeting. You use the head to the neckline, you project it roughly around there. Okay, you can even go lower than that, but this is a significant level. So I think in terms of like clear FX opportunity right now, I'm personally looking out for will be the euro and the dollar cat, and of course gold that we mentioned just now. Yeah.
Okay, so yeah, I mean that you guys, I provide some, stocks, trade ideas, and Kar Yong give you some FX trade ideas as well. Again, this is not a recommendation to tell you what to buy or what to sell. This is just basically telling you what we are looking at and how we trade the market. So I'm sure you learn a lot from Kar Yong as well. Okay, so I think I saw a question on this. Okay, so there is asking, but ICLN cannot chase anymore, already went up. So this is the clean energy. Okay, so by the way, I'm not asking you, it has really moved up. I'm not asking you to chase. I'm just telling you guys, to watch out that this, industry, okay, these sectors, that it is actually moving higher and is stronger, starting to gain traction and such. So let me try to share my chart over here, like ICLN over here. All right. So right now, price is consolidating, at a high over here. Okay. Personally, I won't chase. Okay, but at least that price, it is stronger. Okay, and right now for the ICLN, can be consolidating through this big range over here. Okay, let's say if price start to break out of this range, okay, they may consider wait for the pullback, and then go in again. So there are many different way of entering the market. But what is important right now is you want to know what are the sectors, what are the industry that is moving, that is stronger, where the money, the smart money is flowing the money into. Just like for example, they mentioned right that the XBI. Previously, I mentioned that price, it was a strong sector, strong industry. So price went up quite a bit already. So I didn't chase also. So in fact, I also waited for a while. I wait for a pullback, okay, and then I enter again. And it is in line with my own style of trading, has broken above, the cloud, at the support above the central pivot range. And this shows me that, it has turned into an uptrend. This is a strong sector, and this sector industry might continue to move higher in weeks or in months to come. But it doesn't mean that I have to chase immediately right now. It just tell me that, hey, I should watch out for this, I'll wait for the opportunity to go in, okay? All right, so I hope that is clear, okay, to you. It's clear to you, all right? You also keep in the watch list. Yes, what Henry say, keep in the watch list. And Mango is telling that because of end phase, again, you want to see what are the component stock in this clean energy, you can go to etf.com/ICLN. All right, and I also, before we end this session, I also want to just recap that this Kar Yong, right, this eSmart Mastermind, all right, the fee is only 594 and get access to all these courses, the 4 trading pillar, the Elliott wave, dividend, everything, okay, for just 594. And also the daily trade signal, okay, the seasonal trade, momentum trade, dividend growth portfolio, and portfolio rotation strategy. And of course, some may say, hey, 594 is annual pass, but don't fret about this annual pass. You go through the course first and see how is it. But within 1 year, you can definitely finish everything. At the end of the year, then you decide whether you want to renew because of all these trade signal that you think that is giving value. But first of all, just understand, go through all this. Because I really feel that Elliott wave is something that's interesting, and it can help you a lot into pinpointing certain entry. For example, like what Kar Yong mentioned about this Euro USD. So I've never thought about using the 4-hour chart and see this three wave pattern. So once I know about that, I might focus. Hey, maybe Euro is not really the time to go in yet. I might try to fine tune my entry and such. So I think that would definitely help you. Okay, so this is just my personal view. And once again, if you want to get access to this mastermind program, right, you just go to this banner over here, eSmartMastermind.com/marketwise2022. And once again, I will post the link in the comments. Okay, in the comments. All right, so you should be able to see it. And if you're watching this replay, just go to the link over here. Okay, so right now we are nearing 1 a.m. already. So thank you, Kar Yong, for staying with me until 1 a.m. And right now we have about 162 people still with us. Okay, so if you enjoyed the sharing session by Kar Yong, right, just giving some appreciation just by typing, Kar Yong, KY in the comments, or just type value in the comments so that we know that you enjoyed this sharing today. All right. So yeah, I'm there. Kar Yong has a lot to share. I really like his macro analysis. Always give me some very great insight. Okay. So just give us some encouragement, give Kar Yong some round of applause. Just type K1 of value in the comments. Okay, all right, fantastic. You can see, thank you, Kar Yong. Value Kar Yong. So Kar Yong, you should come more often. Are you a night owl also? Yeah, by the way, I just, Kar Yong, in Singapore, as I mentioned, right, he just, reached KL, I think this afternoon only, right? And I think he must be tired, sure tired one, but he still take his time and effort, to prepare his stuff and also, show up on this Facebook Live. So I must really give Kar Yong a round of applause.
Thank you.
Very round of applause. Okay, give Kar Yong some, appreciation. Okay, so once again, thank you, Kar Yong, for your sharing. Any last word for the audience before we end this session, Kar Yong?
Not really, but as usual, just make sure manage risk well in the market.
That
one is more like reminder.
manage risk. So yeah, again, whatever we call our trade, this doesn't mean that we are right. So basically, you really need to have your trade management in place. Okay. Once again, thank you, Kar Yong, for your sharing, and for the 160 people still in the room. Thank you, guys. Have a good weekend. Have a good rest, and I will see you again next week. And once again, I really appreciate Kar Yong for sharing in this Facebook Live. Okay, so yeah, that's all for today, folks, and we will see you again next week. Okay, thank you, guys. Thank you.
Bye-bye.
Bye-bye.